Hello, it's Friday, the 29th of August. Lots we could be talking about this week. We had Nvidia results, which were actually, pretty good, not quite as good as expected, and the stock sold off a tiny amount, but we really sort of already moved on from there. We had the US president continue his sort of sniping at the US Federal Reserve. We've had tariffs go up on India, ostensibly because of their use of Russian energy. We've got new political crises in France. So there's lots we could be talking about. But what I want to focus on really is the Japanese stock market, which has performed probably better than you realize, unless you've been looking for it. It really has sort of gone up almost underneath the radar. If you cast your mind back to the Liberation Day sell-off in April, lots of markets had a difficult few days, and Japan was certainly amongst those. Perhaps not a big surprise. Japan's stock market is sort of famously export reliant, and indeed has a sort of high correlation with the weakening of the yen generally, because it's presumed that a weaker yen makes those exports more attractive and therefore better for the stock market. But this was really focused on the fact that there was a lack of knowledge, a lack of understanding of how impactful these tariffs would be on the stock market, on these exporters, and Japan sold off pretty severely, amongst the worst out there over that few days. The rally, though, has been substantial. So on the way back out, if you sort of move a couple of days forward and plot the performance of these markets from the trough, UK and Germany are up around 22% in sterling terms, and they've done well, as I'm sure you know. We certainly referred to that previously in these videos. Japan up almost half again, up 29% over the same time period. So again, in sterling terms, adjusted for currency, it's actually had a decent run out from the bottom, and it hadn't sold off that much more. And so year to date, its performance is really sort of very competitive, because it fell a bit more, but not a lot more, and the rally's been very strong. So Japanese stock market done very well over this period, and it's probably not something, unless you've been really looking for it, you'd have noticed. There's a number of different factors really surrounding the Japanese stock market that have led to this decent performance. Firstly, there's that sort of technical element, that sell-off that happened at the start of the year, and a sort of rebound back from there as some of the fears, or most of the fears, frankly, around tariffs have dissipated. But there's a more fundamental, bigger picture, really, which is why we turned positive on the Japanese stock market 2 years ago. Firstly, you had decent valuations a couple of years ago. Japan really sort of being pretty unloved for many a year, in a similar vein to the UK, Europe, and emerging markets. Indeed, a lot of these economies really sort of left in the wake of the US as it sort of hoovered up all these assets in the US exceptionalism trade. So trading at decent valuations. And also at the same time, you've had a number of structural reforms stretching back about a decade or so now in Japan, aimed at generating better returns for investors. So focusing on corporate efficiency, focusing on corporate governance, trying to get those valuations up. And you can argue that finally, in the last couple of years, we're sort of seeing the fruit of that labor come through. Another thing to bear in mind in terms of Japan, it has moved into an inflationary environment from a deflationary couple of decades. And one of the reasons why that's important is in Japan, lots of people with lots of cash sat doing very little, frankly, in an environment where inflation is back, and it is meaningfully back in Japan, not sort of race away, but it's certainly back compared to how it was. You can envisage, retail investors in Japan realizing that cash sat in the bank in a deflationary environment is not that bad an investment decision. In an inflation environment, it's a pretty poor investment decision, because you're losing, relative returns compared to what you could be getting in the stock market. So you're starting to see a drip feed of that come in. Another factor is this recent non-US trade. Is not only sort of domestic flows you're seeing in Japan, there's international flows as well. Even looking in the UK, the Investment Association flows data, you can see over the last few months, to the latest available data, a reduction in the net flows into the US and an increase in net flows into places like European Union and Japan. So, there's a number of different factors that have led to this Japanese performance, but it's very welcome because we turned overweight Japan a couple of years ago. So what that means for us in the Liontrust Multi-Asset team is, firstly, of course, it's a welcome boost to returns. We score Japan a 4 out of 5 on our relative weightings scoring tactically. So we have a positive view, and that positive view will be rewarded in terms of this relative outperformance. But what we also need, of course, to be mindful of when we go through our tactical process on an ongoing basis and a forward-looking basis, most importantly, is to continue to be mindful of the valuation in Japan and to make sure that the long-term investment case still stacks up. On the valuation side, looking at price earnings, for example, on a 12-month forward basis, it's creeping up into unattractive territory. It's in the sort of 20s, having been in low teens only a couple of years ago. Price to book, though, is still only 2 times. So, on that measure, not particularly expensive. So you can sort of argue the toss either way, really, in terms of valuation. And also you've got other factors like sentiment, technicals, and of course, global flows to take account of. So valuation in and of itself is not the sole determinant of whether a market's attractive or not. We continue to look at it, and it's one of the sort of topics of debate in our quarterly tactical asset allocation rounds. And as of today, we are still constructive on Japan. So we remain scoring 4 out of 5, and we remain overweight in our Japanese exposure. Ultimately, the benefit there, of course, is diversification, a lower reliance on the US stock market, which, having done well over the last decade through this exceptionalism trade, there are question marks growing over whether that's sustainable and whether it's sensible to be sort of diversified, differentiated, and actively different in terms of your portfolio allocation, which we look to be in our multi-asset funds and portfolios. That's it from me. Have a good weekend when you get there, and we'll see you next time.